Hello, my name is Eddie Tofpik. I'm Head of Technical Analysis and Senior Markets Analyst at ADM Investor Services International Limited, and here is your weekly technical analysis of LME 3-month nickel and zinc. LME 3-month nickel. The market here has tried on various occasions to push up through the moving averages, mainly the declining short medium moving average currently at 29.50 and the medium moving average currently 21.685. Now it has managed to move over the short medium moving average, but as yet not managed to effectively move up above the medium moving average, but well, not since February. Looking at the big picture, I said 11 weeks ago we'll take a fresh look at the action since early May. Back then, I thought the market had elements of a descending scallop pattern, but in late June, prices reached the key 21,000 level and even exceeded it on the downside, such that it seemed, apart from the September 22 low at 20.050, that we had little in the way on the downside. However, the September 2022 low held again in the middle of last month. By these price actions, it had killed off the idea of a descending scallop pattern. So what has that left us with? Well, looking closely at the action again, we can see a rounded bottom pattern with the important bump structure formed over roughly between mid-June to early July. However, the market has not followed through higher on this from this pattern, because if it had, we would have seen it by now. Rather, I am now minded to look at the whole 2023 action as a possible large round bottom or saucer bottom pattern, but in construction still. It is early on in this as an idea, but I think I'll run with this concept for a while at least. Now, one other thing, and it is a more immediate item. I've drawn both a bearish Andrews pitchfork and a bearish shift pitchfork for the action between mid-June to early August. I am minded next time to retire the bearish Andrews pitchfork as prices have punched up through the upper time, currently at 20.185, and looking like they may not come back within the pitchfork anytime soon. The only reasons I have for keeping the pitchfork on my daily chart is to show you what reasons, exactly what I mean. And because the market's having problems moving back up over the short medium moving average. On the bearish shift pitchfork, the market is close to the middle time, currently at 25.35, which has just crossed over the upper time and thus is usually indicative of volatility, which we have seen a little bit of. The other two times for this pitchfork are interesting, as the upper time is running roughly parallel and above the medium moving average and crossing the February 2014 high at 22.155, whilst the lower time is entering a congestion zone between 18.230 to 18.850, which has a lot of highs from 2019, 2021 and 2022 within it. If the September low at 20.045 does crumble, then this zone below, around the lower time, would seem to be a reasonable level to look at as the next support or supports. LME 3-month zinc. This market has exited one pattern, a bear channel dating from April to mid-June, and then started another pattern, a shallowly rising bull channel from mid-June to mid-August. At the same time, it's maintained its position within a very large May to August 2022 bearish shift pitchfork. At the moment, just over the middle time, which is currently at 24.16 and is highlighted in purple on my daily chart. I just wish to emphasize that point. This bearish shift pitchfork is now just over a year old, and it is still working in driving prices lower. In the bigger picture, I asked 10 weeks ago an open question as to whether we have in the May to date action a possible bearish halfway hesitation, or a possible bearish descending scallop pattern, or finally a possible double bottom in construction. I am now minded to think the following. The possible bearish halfway hesitation and descending scallop pattern ideas, well, they don't work anymore. though I will leave the door open to the halfway hesitation again if some appropriate evidence is presented. As for the possible double bottom idea, on this I am not sure on yet. I think the jury is still out on that one. However, with the action in LME 3-month nickel in mind, there is the possibility that the whole 2023 action so far is a very large, rounded or saucer bottom in construction. It is too early on this idea to be positive, but I would like to put it out there, as I think it has some possibilities. Finally, I have for many months now spoken a lot about the March 2020 to June 2022 ascending expanding wedge pattern. This is now way up off the top of my daily chart. I've given in the past some outlandish potential targets for such a long dated and wide pattern. The primary outlandish targets for such a pattern were in the 25-45 zone. Now, this was achieved actually 11 weeks ago. 5 weeks ago, I retired the potential secondary target X1 as events and fresh patterns have overtaken this idea, and I think that will be the last I will speak about those.
Thank you for listening. This weekly broadcast gives the essential market patterns and consequences. Please be aware of the risk disclaimer posted both at the front and the back of this broadcast. Copyright is Eddie Tofpik and ADM Investor Services International Limited. And here comes the final important bit.